Good day to everyone, and I would like to wish all of our viewers a happy and healthy new year. 2023 was a year when external events shaped the investment universe and society at large. The war in Ukraine continued, and a new war erupted in October between Israel and Hamas. The market was focused on a Federal Reserve pivot, and the market believed they received a pivot message in December. To the layperson, a pivot would signal the end of interest rate hikes and the start of a cycle of lower interest rates. The stock market is always a leading indicator, and as the strategists and economists look to 2024, they see lower interest rates, which are good for the market. The other key driver for the market is earnings. The markets in 2023 forgot about recession and were up, led by the technology-heavy NASDAQ. The NASDAQ increased 44%, the S&P 500 23%, and the TSX 11%. It is important to note that the Bloomberg Index of the Magnificent Seven, the largest and most prominent technology companies in the world, all domiciled in the US, was up 107%. That's correct, 107%, and accounted for approximately 2/3 of the gain of the S&P 500. Although these are fantastic companies, we do not believe they will repeat the performance that they had in 2023. On the TSX, the star performers were Celestica, up 154%, Shopify, 119%, Cameco, a uranium producer, up 86%, and the former SNC-Lavalin increasing 57%. What to expect in 2024? We learned that it's very difficult to be an economist or strategist in 2023. Fully convicted views of a recession in 2023 did not come to fruition. We are not here to disparage the economist or strategist profession, but merely to pinpoint how hard it is to accurately pinpoint the exact start of a recession. Many economists and strategists are dedicated, hardworking professionals, but predicting a large, complex entity like the economy with precision is fraught with error and incorrect timing. We do have business cycles, and the business cycle has not been eliminated. In Canada, we are not creating jobs at the same rate as in the US. Stats Canada recently released employment numbers that showed for the month of December that approximately 0 net new jobs were created in the month of December. Canada's unemployment rate held steady at 5.8%. In Canada, more part-time jobs were created than full-time jobs. The US, in contrast, added 216,000 full-time jobs. With all economic data, there are some data points that do not fit or blend with others. In December, Canada, on a year-over-year basis, average hourly earnings grew at a 5.7% rate. When we look at all the evidence, statistical, factual, and conversations with company management teams, we see the economy slowing at a much greater rate than the US economy. Going back to our discussion on the economy and GDP growth, we are not going to hazard a prediction on when a recession will start, but we do believe there are structural factors in Canada, such as higher personal and corporate debt, lower productivity, and a large amount of lower interest rate mortgages maturing over the next 2 to 3 years. These mortgages will be renewed at higher rates and thus will dampen consumer spending. The Bank of Canada will be watching, and we believe will act by lowering rates to ease some of the self-inflicted debt burden that we have in Canada. As mentioned earlier, there are macro geopolitical events that are known. These are the known knowns. In November 2024, there will be a US presidential election. But again, don't look here for a prediction. We manage to any political or economic outcome. How we act in 2024 will be more of the same. We will roll up our sleeves and look for dividends. Look for dividend champions. Those companies, those companies that pay dividends on a regular basis and grow their dividends. Themes that we will pay attention to are increasing electrification of transportation and the overall economy, growing populations, and geopolitical events, both new tensions and old ones. We encourage you to stay invested in 2024 and watch for rate reductions, first in Canada, then the US, and the impact that they will have on dividend stocks. We believe they will have a positive impact on dividend stocks.